Hello, everybody. My name is Alesh Eisner, and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending July 7, 2023. Looking at the market indexes for the week, the TSX, S&P 500, NASDAQ, Dow Jones, and Russell 2000 were all down this holiday shortened week. Gold was up, and oil was up to over $73 per barrel for the week. There was a lot of volatility, and with expected interest rate hikes on both sides of the border, the stock markets did not do well. Turning to Canada, on Friday, we had Canadian job numbers. We had 59,900 new jobs created, much higher than the expected and better than the job losses we had last month. We added over 100,000 full-time jobs and we lost 42,000 part-time jobs, which is very positive. Our unemployment rate still snuck upwards as the participation rate increased with more people looking for work. The Canadian economy appears strong and makes another rate hike likelier next week. Overall price of homes in Greater Vancouver in June rose 1.3% compared to the month before to $1.2 million average price. A Coldwell banker Richard Ellis CBRE report shows that the national commercial office real estate vacancy rate in Canada climbed in the second quarter to its highest level since 1994 to 16.8 million square feet available across the country, and all-time high, and a 30-year high in terms of vacancy. The impact of remote work is the biggest single issue, but there is also the recalibration of the technology sector, which is starting to focus on the profitability rather than just growth. Secondly, the fear of recession. And thirdly, there is a lot of new product being supplied, and it is hitting the market at the wrong time because of how long the construction takes. Toronto's housing market slowed in June for the first time in 5 months, according to the latest TRREB numbers that showed Toronto home sales fell in the month of June. It may be due to buyer sentiment due to the recent Bank of Canada rate hike, which was just 0.25% but showed a chance of further rate hikes. Turning to the United States, on Thursday, the U.S. initial jobless claims came in at 248,000, slightly higher than expected and higher than the previous read. So this is an indicator of the economy slowing. The U.S. jobless claims 4-week average is 253.25 thousand, slightly lower than expected and slightly lower than the previous read. The U.S. JOLTS job openings came in at 9.824 million, less than forecast. On Friday, the U.S. had its jobs report. For the hourly earnings are still up 4.4% year over year, showing inflation. The unemployment rate is 3.6% as expected and lower than the previous months, showing strength in the U.S. jobs market and giving a nod to further rate hikes in the U.S. I don't see any softening in the labor market. The US Fed doesn't have to worry about the jobs market, and when you look at their mandate, they have no reason not to keep hiking and to keep hiking for a while. They seem to have 2 more rate hikes in store for 2023. The US Fed minutes from last month's Federal Reserve meeting came out Wednesday. As expected, the Fed minutes reflected policymakers' desire to resume hiking rates after June's pause, as Chairman Jerome Powell aims to get the annual inflation rate down to the central bank's target of 2%. The markets did not like that, although it has been communicated multiple times now. Tesla deliveries surged in the second quarter. The company delivered 466,140 vehicles for the period, easily topping estimates of about 445,000 units. It was an 83% increase year over year. The total beat Wall Street's expectations. The spike follows the electric automaker's efforts to boost manufacturing capacity and comes after it offered incentives to increase sales in the US. According to a recent survey, over 60% of American households describe themselves as living, quote, paycheck to paycheck in April of 2023. This number has been fairly consistent over the past 3 years, although it did fall close to 50% in the spring of 2021, presumably due to the cumulative effect of government pandemic aid. That aid is now long gone, and more recently, consumers have tried to maintain living standards in part by increasing credit card borrowing, which has risen by more than 13% over the past year. Needless to say, this rate of increase is not sustainable, and returning to slower borrowing growth could hurt spending. We have also seen a recent increase in delinquency rates, although not to the recessionary levels. Banks responded by tightening lending standards on credit card, auto, and other consumer loans in the first quarter. This may have continued in the second quarter in reaction to the regional banking crisis. Janet Yellen was visiting China starting Thursday, concentrating on economic talks with her counterpart and other officials. Now for some bits and pieces. Saudi Arabia and Russia, the world's biggest oil exporters, deepened oil cuts on Monday, sending prices higher despite concerns over global economic slowdown and possible further interest rate increases from the U.S. Federal Reserve. OPEC Plus, which groups the Organization of the Petroleum Exporting Countries, OPEC, and allies led by Russia, has already been cutting supply to boost prices since November last year due to weaker Chinese demand and rising U.S. supply, but so far has failed to move them much from a range of $70 to $80 per barrel. Saudi Arabia said it would expect its voluntary oil output cut of 1 million barrels per day for another month to include August, adding that the cut would be extended beyond that month. Shortly after the Saudi announcement, Russian Deputy Prime Minister Alexander Novak said Moscow would cut its oil exports by 500,000 barrels per day in August. China announced on Monday that it would control exports of some metals widely used in the semiconductor industry, adding further uncertainty to global trade relations. According to China's Ministry of Commerce, unspecified export controls will be implemented on the minerals gallium and germanium starting next month. A private sector survey on Wednesday showed that China's services activity expanded at the slowest pace in 5 months in June, primarily due to weakened demand that affected the post-pandemic recovery momentum. The reading, which comes after disappointing figures on manufacturing activity, indicates a slowdown in growth during the second quarter as China's major economic drivers lose momentum. Turning to next week, we have companies starting to report for Q2. On Thursday, we have Taiwan Semiconductors, Pepsi, Progressive Insurance, Delta Airlines. On Friday, we have United Health, JP Morgan, Wells Fargo, BlackRock, and Citigroup. Economic events next week. On Wednesday, we have the U.S. Consumer Price Index, so we'll get a read on U.S. inflation. We have the Canadian interest rate decision with an expectation of a 0.25% rate hike. And we also have U.S. oil inventory data. And on Thursday, we have the U.S. Producer Price Index. If you have any requests on what you'd like me to cover in future videos, please put that into the comment section. If you'd like to get in touch, please reach out on any of these social media channels. And may you have a profitable day.